first thing I always want to make sure that we ask, for you guys, what's the most important thing, as you think about financial basics? And when I say basics, I mean, this class, we're going to go through some very basic concept for finances, because what I have learned in the years that I've been doing this is that people have a tendency to be very nervous about financial knowledge, and they get a little embarrassed about not being able to calculate things, or how do I track things. So I know that we're recording, which normally don't you love this? I usually don't allow them to record because it gets a little uncomfortable in this room, but there is no wrong topic. And if something comes up that you would like me to stop recording, happy to do that, so we can kind of deal with it during the class, and then we can always start recording again. So for you guys, as you think about kind of your knowledge of what finances look like, both for your personal life and for your business, what are the top things that you want to make sure that, like, if we don't cover anything else in our next couple hours, like, you want to make sure that we cover? And this is all about you guys. So, like, what would you like to see?
I think keeping track of your expenses is important.
Expenses, great. And would that be both what kind of constitutes an expense in real estate or in personal, and then also like a mechanism that you can use to track it?
Yes.
Okay.
Like what your income and what your expenses are, how to keep track of both of them.
Okay, awesome. Thank you. What else? What else do we want to make sure that we cover?
I'm sorry for all the background noise here, but
we don't care.
One of the main reasons that my husband and I are getting into real estate is that we're looking to hopefully get into investment properties, and so we want to know, like, what's the best way to get started with that?
Great. Investment properties. So kind of how to plan.
Yes.
And so are you, like, as you guys are thinking about investing for yourselves, are you thinking that you would kind of use the revenue from your kind of real estate sales business to fund down payments or cash deals for your properties?
Yes, that's exactly it. We're dual career as well, and we're hoping
Right.
to jumpstart our real estate investments by being real estate agents.
Great. Okay, perfect. Thank you. What else?
We discussed whether or not it's important to have business banking accounts separate from your personal.
Yes, we can. And the answer is yes. Heck to the yes, it is. Can absolutely. What does that look like to set up accounts? Great. All right. Anybody else before we get going?
Maybe tools that we can use to track income and expense.
Yep. And also for those of you, I don't know, Liz, if you already know how to do this, but is everybody familiar with how to actually track their income through KW? Like, are you aware of the reports that you can pull within KW to understand how to find, like, how much money have I made?
Other reports through KW now.
Okay. Okay. Beliefs about money. That's great. Thank you. Tax write-offs. Okay. So tax write-offs, my caveat is we will, that I'll give you probably multiple times during the conversation is, I am not a tax professional, and I'm not an attorney, and I am not a CPA. Okay. I am a music major who majored in piano performance, who went into real estate when she was 21. So believe me when I say you do not want to take tax advice from me. So I will tell you that you definitely, if you're serious about doing this as a business, you want to have a couple people in your arsenal, and the first one is going to be a CPA, not a bookkeeper, somebody who actually knows the tax laws, because they'll give you a really good understanding of what kinds of things can you classify what kinds of things should you be looking out for? At what point in your business you're going to start thinking about, should I get an LLC? Should I, how should I get my money? How should I get my commissions? And a good tax advisor is going to be able to do that for you. So for those of you who do not have one, I'm happy to put I've got a couple that I do recommend. The MCA in your office also should be able to, so that is my email and that's our main number. So just give me a buzz or email me and I'll give you, I've got one that works with a lot of my agents over in Bethesda, Chevy Chase. And then I certainly can find you more. So there's multiple ones. So that's great. Okay, well, that's a good list. Did I miss anything? Money mindset, beliefs about money. Yeah. I'm so glad that you said that, Lydia, because what I have found about money is that it always starts with your mindset. And the really interesting thing about this part of the business is that mindset is formed from however many years you've been alive and kind of your experience with the world. And sometimes people think that, I'm 20 years old or I'm 30 years old and I've kind of got my ideas about money and that's kind of where I am and that's kind of where I'm going to be for the rest of my life. And I am someone to tell you that is so wrong. And that your mindset about money, I personally think, is one of the easiest things to shift. And I'm happy to, before we get into the slides, to start out just kind of a little bit about our family. So we, my family and I have moved, from state to state for different reasons. And it wasn't until, I'm in my 40s. And have worked since I was 21 years old, got out of college. And it wasn't until I was probably about 37 that I read a book. Can you hear my 3-year-old? That I read a book called The Simple Path to Wealth. And it was a book that my OP, her name's Kimber Mankiti, she runs kind of our market center. She gave to me one day and I thought, well, here's this woman giving me a book. And I'm with Keller Williams. People have handed me a lot of books. But I went home and I read, I thought, well, she's a successful woman. I'm going to read this book. And I read it in like a day. And at that point, I think I had a newborn. And so I can't believe that I actually stayed up all night and I read it. And from that moment on, I thought, you know what? This whole time I have thought that somebody else, some magic creature, is in charge of my wealth and my money and my future and all this stuff. And in that moment, I realized that, well, no, it's you. You're actually in control of this. And I'm not joking. It's in the last 3 years, it has changed the trajectory of the way I think about money in a big way. And I was always of the mindset, I am not a producing agent anymore. So I've been an agent since 2004, but I don't do sales. I keep my referral license active. I do a couple referrals a year. It's not a big income maker for me. And I thought, you know what? I have a W-2 job, right? Like just like most of you, I have a job and I've got 2 kids and they're both in daycare and we live here in DC and it's very much different from the Midwest. And there's no way that I could ever save money, right? Like I don't know where it goes, but it goes somewhere. And there's no way for me to actually build a financial foundation that's really stable because I'm not an agent, I'm not making all this money. And I was so wrong. And I was so wrong. And it made me realize that all you have to do is focus on it. And then once you focus on it, it starts building and building in a really real way. And it starts just with moments of choice. So Lydia, yes, I think that mindset is one of the most important things for sure when it comes to money. So I'm here to tell you that you are never too late to learn about this stuff. And I promise you, let me get this shared. I promise you that there's a whole host of people out there and what I've learned that are in your same boat. And the trick is you just have to be okay with asking a million questions and be okay with not being the smartest person in the room and be okay with, figuring out how it works for your family and yourself. So let's get going. In case you didn't know it, you guys are in Ignite. Hopefully everybody is in the right spot. This is Ignite at Night. And today we're going to be talking about financial basics. So who can tell me, what do successful agents do every day? Gosh, you guys have learned a lot. This is like towards the end. So lead generate, make seller listing presentations, make buyer presentations and get listings, preview real estate. And that's all in growing the business. Why do you think that they focus on growing the business before you learn how to run it? Seems kind of backwards, doesn't it? Why do you think that is?
Because if you don't grow your business, you never have anything to run. So it's good to kind of build that that foundation and have, grow that business out, because it's nothing to run if you don't have any business. So you'll just be learning to do something but never utilize it because you don't have the business there.
That's totally right. Thank you. They always say that education without implementation is entertainment. And it's so true, right? Like you could learn all day, learn how to be a real estate agent, learn how to do your marketing, learn how to do your website, learn how to do all these things. But if you're not actually out there talking to people, none of it matters, because you're never actually going to have a business to run. At that point, it's just, you got your license to play. And I have a feeling nobody in this room got their license to not, at the very least, get back all of the fees that you had to pay when you started your real estate business, right? This is not a cheap business. I mean, we pay $2,000 a year, just no problem, right? And that's just fees. And, you guys aren't all part of GCAR, but your affiliation and your MLS and all that stuff. So you got to have some money before you can learn how to manage it. Having said that, it's important to know what to do from the beginning. So we're going to go through a couple things today. We're going to look a little bit at the models. So Keller Williams has some wonderful financial models. And for those of you who are kind of familiar with the MREA and have read that, or maybe you've taken agent financials, there's a lot of models to implement at all levels of the business. So we'll talk about that. All right, who wants to read the first one? Number 1. How do we create? Thank you, Mariah.
Set a profit goal that funds your big life and pursue the activities to achieve it.
Set a profit goal that funds your big life. What does that mean? What does that mean to you guys? To set a profit goal to fund your big life. What is a big life?
Well, we did it earlier in Ignite when we talked about what it would take for us to live this life that we are dreaming of, like whether it's paying off debt for your kids or, being able to vacation or whatever your goal life looks like. Then you have to set that number. We kind of like wrote it out, and then you budget for that, or you make your goals towards that.
That's great. Thank you, Angel. I think Corey, you had something too that you wanted to add. Oh,
Hi. Yeah, I was just going to add basically the same thing that we did, set a goal, and I believe that setting the goal just gives you an idea of where you need to be as you mark off your to-do list, where you need to be, how much you need to make to be able to do those things.
Yeah, and for the interesting thing that I found, and I don't know if everybody on the call is a dual career agent, but the thing that I have figured out is that dual career agents have, and it might be why I like you all so much, is that you have other jobs usually to pay your bills. You can pay your bills, you can pay your house payment, you can do all those things. Usually people get into real estate as a side gig because either they want something for their life that their current job does not provide. Either it's resources in the form of money, or it's opportunities, or they want to do, what somebody was talking about earlier, they want to build a portfolio of investment properties. But then somebody, sometimes people want to have money to send their kid to a private school. They want to have money to send back to their family in a different country. They want to have money because, they're 60 years old and they never saved for their retirement. So they're going to supplement it by saving now. Like there's all kinds of reasons of why people get into real estate. And I think that the overarching theme that I hear from folks is always that, why do you get into real estate? I want to help people. And that is such a great thing to do. I like to think that I help people in their businesses and in their lives. And the reality is that you can help people lots of ways. One of the reasons we get into real estate is because we have a financial component to it that we really want to hit. And the financials matter. And so I always want to make sure that people don't lose sight of that, because wanting to help and wanting to grow a business, those are all great things, right? But we also want to make sure that we have fixed in our mind, I would like to see X money from this. And this is how I'm going to get there. And so that's kind of how I think about this one, the set a profit goal that funds your big life and pursue the activities, right? Because you're going to work a lot harder after work and on the weekends and during your free time and your vacations if this is going towards something that really matters to you, right? To you personally. So I think that's great. Thank you. And we're going to talk later about what profit looks like, how to calculate your own profit. So number 2, who wants to do number 2?
Estimate, save for and pay your taxes on time.
Yeah, why is that important? So for those of you who have never had your own business or have been a 1099 contractor, what does that mean? How often do you pay taxes as an independent contractor? Does anybody know yet?
Quarterly.
Quarterly. That's right. Yep. Estimate and pay your taxes on time. The biggest thing that I see for our agents is, I'll tell you about my best friend who got into real estate at the same time as I. I got in with I finagled my way into a commercial broker that gave me 100% of the business. And 17 years ago, that was a really big deal. She got on with a really big national firm, and we got to the end of our first year, and I had a business owner for a dad. So he, I knew how to run a business just through him. But her parents were both teachers. They had never run a business before. She did not realize that she had to save any of her money for taxes. She thought all of the money came out of her commission checks. And so she was 22 years old, and she had just gotten married, and she had just bought like a $60,000 house in Columbus, Ohio. And she got a tax bill because she made like $85,000 that first year. And she got a tax bill, I think it was about $21,000. And keep in mind, $21,000, I mean, her house was $60,000. So that was a big portion of her income. And she spent the next 10 years of her life paying off that debt. And she got out of real estate in her second year because of that. So the biggest mistake that I see people make is they don't have separate accounts for their taxes, and they don't intentionally do it from the very beginning. That first commission check comes in and they think, oh, it's just my first one. Like, I'm sure that, especially if I have another job, like I'm sure that the job's taxes will cover that. I am here to tell you from your very first commission check, you should make sure that you have separate bank accounts, and those separate bank accounts are for, your operating expenses, your profit, and your taxes, your tax savings. And as I said, I'm not a tax, I'm not a CPA, but I would tell you that personally, I save about 35% of every commission for taxes, because the worst thing that could happen is I have oversaved and then I have that money at tax time. So I think that, one of the things that we talked about at the beginning was you guys had questions with regard to kind of to bank accounts, the question of, should I have separate bank accounts? And the answer is absolutely you should. You should have a business bank account. That business bank account should be attached to, whether it's a debit or a credit card, whatever it is, so that you can pay for your expenses with it. You should also have a separate tax account to keep your taxes. And why is that? Because it's so hard to untangle problems going back. So if you think about just your personal bank accounts, it's very difficult to identify, even if you're keeping folders of receipts for yourself, it's very difficult to untangle it. I can tell you, I think I pay maybe $12 a month for my business banking, and it's because I wanted a specific one. There's probably business banking accounts out there through Ally or one of those that are completely free. And you don't have to have an LLC to do it. You just sign up as a sole proprietor with your social security number. All right, number 3, use the proven models and systems of the chart of accounts. Who actually knows what the chart of accounts is? And remember, we don't judge here. Has anybody kind of run into the chart of accounts yet? Not yet? Okay, so the chart of accounts, and I apologize, I should have the MREA right now, but if you go to your MREA in the budget section, it's probably in the appendix, it'll have a chart of accounts. So for Keller Williams, when they built the systems and models that make up the Millionaire Real Estate Agent, they actually created a chart of accounts based on all of the different millionaire real estate agents that they were doing. And it buckets it together, and it tells you how much money should I be spending on X? How much money should I be spending on salaries, on office space, on office supplies, on lead generation, on all of those things. And it's got some good benchmarks. So for you guys, I'm assuming that everybody here is a solo agent, right? Like you might not have a big team, so you're not going to have salaries or things like that quite yet. But use it as a good rule of thumb. So kind of 2 big things to remember is you've got, when you think about expenses, you're going to spend probably at whatever level you're at, you're going to spend about 30% of your money is going to go to lead gen. And we can talk a little bit later about like, what are the things that actually make up lead gen expenses, but just, make sure you go to the MREA or go to KW Connect, go to your MCA in your office, ask them to give you a downloadable chart of accounts. So that way you can start tracking it. Because you want to make sure that, if there's a model out there that's working for people who are making $1 million, chances are you're going to be able to start with that and tailor that to you, even if you're making $10,000 this year. Okay. Be fiscally savvy by reviewing your financials monthly. All right, who is looking at their financials monthly? And that can be applicable to your personal or your business. So who kind of looks at their financials on a monthly basis? Or would like to know how to start?
I'd say I'd probably look at our family's financials on almost a weekly basis. Maybe sometimes a little too much, just maybe not necessarily like recalculating everything, but at least, in terms of, I try to do a good job of like just entering, things that we spend on and allocating X amount of dollars for certain budget items, and just doing a budget for all of our monthly expenses. And that's just done through like applications and like Mint or something like that,
Oh yeah. Have you found, what have you learned through that process? You've been tracking it for a while. What have you learned kind of about, where you were when you started versus where you are right now? Like, have you found yourself behaving any differently now that you track it?
Oh yeah, definitely. I mean, I spend more frugally for like, now that I've started tracking it. We're a lot, more strict on, just loose spending and just, I don't know, I've definitely paid attention to every dollar that you spend, throughout the month. And beforehand, it's just, like, oh yeah, I use a new pair of jeans or a new pair of shoes or new golf clubs or something like that. Yeah, we got the money in the account for that. Let's spend it. But, now you have like a purpose for, every dollar that you make, well, for us, we're, dual career. So we have, generally the same amount of money that we make each month. So we have a purpose for each dollar that we make that month now. And it's, just better planned out throughout the month.
Yeah. Sometimes it's about intentionality. The thing that I noticed is that it was never that I was overspending. So it wasn't about an overspending. It wasn't that I had this high use of debt. It wasn't any of those things. But it's amazing to me how when you focus on one thing, and for me, these last 3 years, it's been finances. When you focus on one thing, you learn a lot about the topic, and you learn a lot about yourself, and you learn a lot about what actually drives you day to day. I think that was really surprising to me. So we started, I have always, for the last 7 years or so, done the financials for business, right? So I moved from St. Louis to the DC area. And so I've done, financials for different businesses. But it wasn't until these last couple of years that I really started focusing on and like transitioning that knowledge over to our personal life. And at the beginning, it was more of just like could we be overspending on something? And then once I started tracking it and I track it also on a weekly basis, but at the beginning I was tracking it on a monthly basis. I was floored with the things that did not occur to me that were so easy to cut. And I think that, when you're thinking about your business, one of the reasons why the Ignite program teaches you, like, review your financials monthly is because, it's kind of like your weight. Like, you still spent that money. Just because you don't realize that you spent the money, I promise you spent the money. Just like your weight. You weigh what you weigh. The scale does not create a weight for you. Like, you already weigh that. But getting on the scale makes you realize that, oh, I weigh X. So sometimes I think with financials, people get scared because they think I'm overspending, I'm not making enough, I'm not, all of those things. But the reality is that knowing that is going to give you a lot better understanding, and knowing that is going to give you a lot more peace of mind than just having that be a topic that like you don't deal with. So I would encourage anybody who's not looking at least the basic business expenses that you're spending on a monthly basis, create a cadence around it. And for those of you who like really, really hate financials and math, like, get your favorite something, whether it's a beer, like a really fancy beer, or like a really fancy coffee or something. Like, get something you love and review them with that so that you don't feel like it's such a chore. Because sometimes they can feel like a chore, right? Has anybody ever felt that way about like balancing your checkbook? People don't even balance checkbooks anymore, so. Right? Gemma, you're laughing. See, you're right. Like, people don't balance checkbook. Oh, you're doing it right now? Okay, that's hilarious. Okay, if I like had gold stars, like, you would get the gold star right now. You're the only person that I have ever, besides like an accountant, that balances the checkbook. Man, all right, you're gonna have to unmute now and tell me what market center you're with, because I'm totally calling your MCA. Oh, I think.
So I'm coming from a banking environment, and I've seen so much fraud in my entire career. I recently resigned in this past June. So I'm relatively new agent. My office is in Odenton, but because I've seen so much fraud in my life, I try to like look at my accounts every single day, balance every single day, and look at my budget every single day. And I'm old school too. It just works for me.
It just works.
Yeah.
It's a real thing too right now. There's so much wire fraud going on.
Oh yeah, absolutely.
So for those of you who are producing and are getting wires, if you are in a jurisdiction that allows it, That's another reason to look at your financials pretty regularly, is that there is rampant wire fraud going on right now. We see it at the market center level all the time. Thank you. That was fun, Gemma. All right, number 5, pay yourself a salary. So this might be for a future goal for you guys, but why do you think that that's important, to pay yourself a salary? Even at any income level, right? It might not be at the very beginning, but certainly you don't have to wait until you're making $1 million. Does anybody have any ideas why that would be important? Or useful? Is anybody paying themselves a salary now from any business? No. So it kind of depends. You know, I don't know, Corey, if you're unmuting. So it kind of depends, you know, for me when it comes to pay yourself a salary. So a lot of times people pay themselves a salary because it's a consistent payment that they can budget for, right? And the idea is that you should be putting X amount of money back into your business, right? So what most agents do is most agents get a commission check and they put it in their personal bank account and they spend it. And then they wait until the next transaction. And then at the next transaction, they get it all in their personal banking account and then they spend it. And then it's just this constant roller coaster of highs and lows, you know, where you have lots of money some months and no money next month. And, you know, if you don't go for a closing for 2 or 3 months, like you feel you feel kind of the desperation. So the idea of paying yourself a salary is so that you get a little more stability in your life. Now, for dual career agents, you guys have a salary from somewhere else. So for your particular instance, I think once you get to a certain point in production, or as you're thinking about transitioning into maybe a full-time career, that might be an appropriate use of capital. But at the beginning, I think probably thinking about it in terms of separate accounts, making sure you're budgeting for taxes, all those things is probably of more importance than paying yourself a salary. And number 6, prepare now for a financially secure future. So the idea behind that is just your habits, especially if you're not producing at a high level right now, the habits that you're creating right now are going to be the ones that take you through the success of your career, which is really exciting as you think about it. I mean, it's just like having good posture when you do anything. As I lean over my desk and I'm reminded that I don't have good posture right now. It's just like anything else. You start a habit from the beginning, and then as your business grows and as the money grows, you still have those foundational habits that start from the very beginning. So any questions on the rules so far? Kind of the best practices before we get into some of the math. No? Okay. Gary Keller says, money is good for the good it can do. Well, that is very true. All right, so we're going to look at 2 different scenarios here. So we'll do the one on the left first. So we talked a little bit about your banking accounts, how to partition our money off, and we're actually going to do some real world examples. So on the left-hand side, you see that you have sold a house and you've received a commission for $9,000. You see here the little arrow in the check, paid to the order of Jessica Campbell, $57.60. So what happened in between those 2 icons? Why am I not just getting paid to the order of Jessica Campbell, $9,000?
Fees.
What kind of fees?
Your brokerage fees. What else did we pay?
Royalty.
Yeah, brokerage fees, royalty. That's exactly right. Thank you, guys. Oh, and I'm just seeing things in the chat now. Oh, thank you, Corsi. You have no business to run without growing a business. Paid the broker. Thank you, Karen. That's right. So you do not get 100% of your commission. When do you get 100% of your commission?
When you're capped.
When you're capped, what does that actually mean? Because that is very confusing for people new to the industry. What does it mean that we're in a capped model at Keller Williams?
Once you have paid your brokerage the maximum amount that they collect.
Yeah, that's good. I think we had one other comment. Is there somebody else who wanted to hop into
Yeah,
that?
I was about to say essentially the same thing. When you've met your obligation to your market center and your royalty fees, all that stuff.
That's right. You know, it's funny. I heard in a class once that salespeople think about their split. Business people think about their net. So when you're thinking about something like a capped model, you know, like in my market center, you cap around 3.5 million. So once you've done about 3.5 million in volume, assuming that you take about a 2.75% commission rate on all of your properties, you'll cap out and you're at 100%. And what people don't realize is that, you know, they focus a lot on splits. But the split actually it's inconsequential in a capped model, because somebody who's doing $10 million on a $27,000 cap, you know, even if they're paying 70-30 up until the moment that they cap, they're not on a 70-30 split. They're on a much higher split. They're on like a 95% split, right? Because you have to take the whole volume in effect. I have worked for lots of brokerages and they have not all been capped model. And I like the capped model the most because it puts the most money in the agent's pocket. It's actually kind of the worst model for the for a brokerage, because you know, once you pay a certain amount in, you're still using all the goods and services, but you actually aren't bringing any money into the market center, which in my opinion is why profit share and things like that is so important to help market centers grow. So that's why she's down to 5760. So in this instance, she puts 5760 into her personal bank account. And as you can see by the big red line, that is not a good scenario. So then let's look over, you know, over at the right. This is where it breaks it down a little bit for the taxes. So we've got the same 5760. She's putting a portion, it looks like about 30% or so, into a business bank account. And then she's putting the rest into her personal bank account. From her personal bank account, she's portioning out her tax savings account and putting the rest in her wallet to spend. So you can see right here, she's spending, let's see if I can do the math really quick. She's spending money on her business first, right? She's putting it in her business account. She's putting that money in there. It's 30%. So, and we'll kind of talk about what the 30-30-40 model looks like for real estate agents. It's a great model. It's on one of the slides, but they're following this in this example. You know, she's saving 30% for expenses, anything that she should need, and then she's saving her taxes. So any questions on this slide? Kind of what does a financially sound or unsound example of what you do with your commission? You wouldn't believe, I had a meeting yesterday with one of my top agents who is still putting all of her commissions in a personal bank account and has not saved any money for taxes and is still spending almost all the money. And, you know, I think it's a really slippery slope that you get in from your first commission check. Follow the model, make sure you're saving the money.
I'm sorry, what are royalty fees?
Oh, great question. So royalty fees, so if every agent at Keller Williams pays a $3,000 royalty fee. The royalty fees go directly to KWRI, which is our international. So if you're part of any franchise model, whether you're a Keller Williams agent or Coldwell Banker, whatever the franchise is, you will always pay a franchise fee. And your franchise fee is going to be a royalty fee. So for Keller Williams, they will remove 6% of all your commissions up until you cap. So like for Bethesda, I have a total cap of 30,000. 27 is company dollar cap, and 3,000 is the royalty cap. So a lot of times agents will cap differently on different caps. They'll cap on royalty first. Does that make sense?
Yes. Thank
Yeah.
you.
And does everybody feel pretty comfortable on like what a company dollar cap is? It's actually a good time to talk about it if you're not.
Can you explain it further? Oh, it's
Yeah, absolutely. So company dollar. So if you think about brokerages are not a not-for-profit business, right? We have expenses and we need revenue in order to run the business. So when you have a commission, and let's just say we'll give a $10,000 commission. Let's say, you sell a $400,000 house, 2.5% commission, you're going to make about 10,000, right? You are going to give the brokerage, let's say you're on a 70-30 split with the brokerage, you're going to give the brokerage 30% in what's called company dollar. It's basically the revenue for the brokerage. And then the brokerage is going to run the brokerage, all the expenses that we pay for the agents, all the brick and mortar stores, all the staff, all that compliant, everything. We're going to pay expenses based off of that revenue. So the interesting thing about Keller Williams is that Keller Williams is a lead with revenue model, which means that about 99% of our market centers actually are profitable, which is very unusual. So brokerages that are big and public and are getting funding from different places, they don't necessarily have to show profits, but because Keller Williams is an open book company, we have to show everything to everybody all the time because of profit share and the fact that we're open book. And so you'll find there are not many market centers that are not profitable, which is phenomenal because we run with almost no debt. We're all profitable. It's actually a great business model to model your business after. Does that make sense on company dollar? Yeah. Okay. Okay. So we actually went through that already. Oh, okay. Well, here you go. There's the Millionaire Real Estate. For those of you who have not seen it or read it, go to your team leader of your office. They would love to give you a Millionaire Real Estate agent. So just go and ask them. It's a wonderful book. It has all of our models in it. It's not something that you have to read cover to cover. I am oftentimes going back to a section, but this is where it talks about the actual economic model that you should be following. So before we talked a little bit about the 30-30-40 model. So we're going to go through what do these actually mean. So 30-30-40 model means that of your total commission, 30% go to cost of sale, 30% go to expenses, and 40% goes to profit. So as you're thinking about every commission check you get, that's a good rule of thumb. Now, what most people don't realize is that taxes come off the bottom number. Taxes are going to come off your net income or your profit, right? Because you're not going to get taxed on money that you don't have. So let's go through just kind of one by one. So does everybody understand what GCI is, gross commission income, and how to calculate it? That's super important. So this is where the math portion of this particular class is going to start. And we're going to all start with an example. So somebody pick a purchase price number.
350,000.
Yep.
350. Okay. So 300. So we are all going to do the math together. So $350,000. You sell a house. It's your buyer. You are going to get 2.5% of that for your commission. What is your commission?
$87.50.
$87.50. I'm going to pull up the chat too, just in case. That's exactly right. Okay, now if you were following the model of 30-30-40, how much of that $87.50 should you be paying for cost of sale?
$26.25.
$26.25. And how much should you be paying for expenses?
Same, 26.25.
2625, which leaves 3,500 for profit. And the 3,500 for profit is what you're going to pay taxes off of. Okay. So first question, what is a cost of sale? So if you're supposed to, as an agent, stay to a 30-30-40 model, what is cost of sale? How do you make sure that you're doing that? Does anybody have any ideas? I really want to dive into like, what's the difference between cost of sale and an expense? Because those are two very different things.
I know I don't know if I fully understand your question to answer it, but
Oh, yeah.
I guess in regards to like what's the difference? One is the cost of doing, like, if you have whether or not you are having business or making any sales, these are going to be the cost to run your business. And then the other one I think might be I guess expenses that are incurred by I guess when you have a sale, maybe. I think that's correct.
I love the way that you explain that, and you are almost exactly right. So think of a cost of sale. This is the easiest way to remember it. An expense needs to be paid. A cost of sale only needs to be paid if the deal closes. So if the deal closes, you have to pay your company dollar, any referral fees, any of those things on it if the deal closes. So let's say, let's do an example. Let's say I have a listing, right? And to prepare for the listing, I have to get photography and listing. Now, if I have to get photography on my listing, do I have to pay the photographer whether the listing sells or not?
Yes.
Absolutely, I do. So is the cost of the photographer a cost of sale, or is it an expense? It's an expense. Yeah. So think of it, that's the easiest way for me to describe it. And that's the easiest way for you guys to track it is if you have to pay it, regardless of whether that deal closes, it's an expense. If you only have to pay it if the deal closes, it's a cost of sale. And that's the easiest way to bucket it out. And I always want to make sure that in Ignite, that's real clear, because I can tell you, I meet with our top agents constantly, and that's still really fuzzy for them. Even like agents who are doing 100 transactions a year, that is a really like fuzzy concept for them. So does that make sense to the room? That like cost of sale happens if the deal closes, referral fees, any of those stuff. You know, you're paying realtor.com for the lead, you know, whatever you're doing. Expense, you pay no matter what, right? Like you're going to pay your office fee no matter what, right? But you're not going to pay your royalty split unless you actually close and transact on a deal. Okay, perfect. You guys are ahead of the curve. All right, so the way that they teach you, and we can certainly look at some of the tools in Command at KW, is how does the flow of money work with regard to what's coming into your business. So in a traditional way to kind of look at business, you've got income, what goes in, expenses is anything that goes out that I'm paying out, and then profit is left, right? So as I'm thinking about budgeting for, 2022, I'm going to think of, okay, well, I want to make 150,000, and of that, I'm going to pay out 40,000 for my expenses. It's going to leave me with 110,000 for profit. The way that Keller Williams would like you to start thinking about it is think about your goal first. So what's the profit goal that you guys want to make for your life, for your business, for the reason that you're doing this after hours, right? Like, what's the profit goal? How can I get the expenses so minimal to maximize like the profit that I'm having? And then how many houses do I actually have to sell in order to hit that kind of an income? And there is a tool that you have right within Command. It's a goal setting tool. Have you guys found that goal setting tool in your coaching programs or anything like that? So all of you should have a productivity coach in your market center. You might have a technology trainer. We also have a regional technology trainer. Your MCA knows how to do it. You know, if you have like a front desk MCC, they'll know how to do it. So for any of you who have not gone through the goal setting tool within Command, I would highly recommend it because it does all the math for you. And when something does the math for you, I feel like you should take advantage of it. So it does the math for you, and it helps you come up and back into your goals. Oh, Maritza, I'm seeing your notes in the chat about expenses. Look at that. You had it totally right. I missed that. Thank you so much. Okay, so here's all the different kinds of income. Now, we're not talking about all kinds of real estate transaction income. We're not talking about like if you have cash flow coming from rental properties, anything like that. We are just talking about your sales business. So we can earn commission a lot of different ways. We've got listing income, sales income, referral income, and leasing income. Is everybody understand what the 4 different kind of income streams? Does everybody understand like what referral income is, what leasing income is? If not, we can, that's a pretty basic topic, but we can also dive into what each of those mean. Looks like everybody understands that one. Okay. And then expense. Yeah. Okay, everyone gets it. So cost of sale, we talked about. Cost of making the sale, commissions, royalty fees, commissions or splits to employees, referral fees. And then this, we are actually going to skip this particular commission example. Well, we can go through it, but actually the math is wrong. So let's go through it so everybody understands. I'm going to actually stop my share so I can see you all. And let's run through an example just for us. And just know that your example in your Ignite manual is wrong. All right, so we're going to calculate a commission split. And let's take $10,000 because that's the easiest. So we are going to calculate how to prepare for what the market center is going to give you net with a commission deal. So we're going to use the example of $10,000. So you've got a $10,000 commission, and we're going to use kind of a standard 30% company dollar, 6% royalty. Okay. So I want everyone to do the math with me on their own paper. So $10,000 for a commission check. Most people don't realize that your royalty and your company dollar comes out at the same time. So you're going to take $3,000 out of that for company dollar, and you're going to take $600 out of that for royalty. And what does that leave you with? So you're going to do $10,000 total. You're going to take out $3,000 for your company dollar, and then $600.
We have 9,100.
9,100. So try again. So you're going to take $10,000 and you're going to take out 3,000. So 10,000 minus 3,000 minus 600. So we're going to count for both royalty and company dollar. 6,400. Thank you, Karen. That's right. So 6,400. 6,400 is your net income. So that is your net income that you're going to get from the market center. That does not take into account your like an admin fee if you charge an admin fee to your client, and it doesn't take into account if your market center charges you an admin fee. That's just your straight caps. So does everybody understand how that comes out, kind of both at the same time? And if you don't, like, this is your opportunity. We can do like 7 examples, I promise. You guys are good? Understand how the math works on that one? Okay. We are going to do another example that I like, which is the goal setting one. Oops. That's not what I needed. Sorry, guys. Share my screen again so you guys can see just the bulk. Okay, so this is going to be the second one that we're going to do. This is our opportunity to kind of start with our net profit goal. So I want have you guys gone through this exercise? I know some of you said that you had already done a goal setting exercise in another Ignite. Was it this one, or is this going to be new to you?
I'll say it's new to me. We can go through it. I'm fine with going through it.
I don't think we've done this in a previous class.
Okay, perfect. All right, so I want everybody to think about your net profit goal. So think about 2022. It's a new year. What would make you excited to come out of 2022 with so far as your profit goal? Like, make you excited. And sometimes people make the mistake, and I know that we teach in a lot of the classes, like think big, think big. Sometimes it's easier to get excited about a realistic number, is my advice. So think about, like, what would be significant in your life to have a net profit goal at the end of 2020. And I'm going to give you a minute because I want people to actually think about it. You know, is it $20,000? Is it $50,000? You know, what does that look like? And we're talking net profit goal that then you would pay taxes on and put in your bank account. All right, does everyone feel good about it? Everyone's got a number? All right, so I want you to take that number and I want you to divide it by 60. So I'll do it with you. Actually, I'll follow, we'll do it on the screen so you can see how that calculates. So it looks like for this example, get your faces a little smaller so you can see. Looks like their net profit goal is 100,000. Okay, they want to have $100,000 to pay taxes on and then fund whatever it is that they want to fund. So they divided it by 60 and got 166,666. So take your number. I'm going to use 25,000 because that would cover my kids' daycare for a year. And I'm going to divide it by 60%. Okay, 41,000. Now you're going to divide by 40. And that's going to give you your gross commission income that you need to make. So gross commission income is all of the commission that you get from all the transactions totaled up for the year. Okay, so I've got mine, it's 104. Now we're going to divide that by our average commission income. So it's going to be different for everybody because everybody's in a different, slightly different market and is going to have a different price point. So for those of you who don't know, you know, because you haven't done a deal yet, maybe, I always advise my new agents in Bethesda, you know, think about where you live. Like here in Montgomery County, I think the average price point is about $585 or so. So I would probably calculate, if I was a new agent, 2.5% off of that and use that. So you have to kind of go with your market. Does everybody understand how to calculate it for your particular market, kind of using data around where you live? I can't see your faces, so I'm assuming that silence is. Okay. So for this example, they divided it by their average commission rate of 7.5%. I'm going to divide it by 10,000 because that's what it is in Bethesda market. And there you go, 56. So this tells you that you have to sell, in this example, 56 homes. For my example of wanting to net 24,000, I have to sell 10 homes at my price point in order to make that kind of profit. It's going to calculate what is my anticipated cost of sale. Now this is assuming that my cap is 20,000, which it's not, but you know what your cap is for your market center. And then I would multiply my gross, which was up there at 166, by 30 to understand what my op expenses budget was. Now, in my opinion, more important than understanding what my op expenses budget is, it's the number for home sales. That to me is the most significant piece of it, because sometimes you can say, I want to make 100,000, but that doesn't mean anything because you don't actually know how many houses that you have to sell in order to make that 100,000. And even further line down that, you don't know how many appointments do I have to go on in order to get enough listings or buyer agency agreements to sell those. Which brings me to a really good point. I'm going to pull up your faces again. Is this anybody's first time in sales, like in a sales business?
Yes.
Or do some of you, yes.
Yes.
Do a lot of you do your like full-time jobs in a sales business, or is this kind of first time in sales for people?
I'm on the opposite. I buy things for a living.
You buy things for your buyer. That's great. You and my sister, we get along very well. She buys for Abercrombie. So for you buy for what?
I buy for the government.
Oh. I'd like you to reduce my taxes and buy less.
I'll try.
Just kidding. Just kidding. I'll do your job. We won't judge you here. So for those of you who have never been in sales before, it's really important for you to track your numbers. And so if people have not been telling you like over and over and over and over, you need to understand how your pipeline works in relation to your sales. So you have to understand, like, I have to make X amount of calls with this conversion rate to get X amount of appointments with this conversion rate to get X amount of agreements that have X conversion rate to sell to get this many deals. So if you guys have not figured out that formula, work with your productivity coach on getting that, because the biggest gap that I see is that people don't really understand where their gap in sales is. You know, I get people who, you know, do 4 or 5 deals a year and they say, I really want to make more money, but I don't have enough leads. And then we dig into it and we figure out that like, they don't actually have a lead problem. Their problem is conversion. It's a totally different skill. So, you know, as you're getting into the business, you don't really know what your conversion rates are yet. You will, and you should track them throughout your whole business. But make sure you're getting with the coach, or getting with your team leader, or getting with your MCA, and you're having somebody help you kind of walk through that, because you want to understand, how many calls do I have to make a day? How many open houses do I have to do? You know, how many smart plans do I have to do? Like, you need to understand how your activity is going to translate into your money, right? And you have to do that at a very granular level so that you understand what's working and what's not. Because otherwise you just run around doing a bunch of things, but those things aren't actually producing the results that you intend for. So I would just always encourage people to, you know, really make sure that you are being intentional about how you're doing activities, how you're tracking them. And it may seem monotonous, but I can promise you that, like, when you get better at things, you know, like when you get better at your calls, when you get better at the open houses, when you get better at your listing presentations, you're going to really enjoy seeing your conversion rate go up. You know, like my top agents probably have a 95% conversion rate. Like I have one agent who I bet he gets every single listing on the appointments he goes on. So like, to me, that's a really good use of his time. All he has to do is get the appointment and like he gets the listing. So for you guys, you're learning how to do all this stuff at once. But one of the best things to do is to remember to track it. As boring as that seems, I know. I've been there. It's not a party. This is a business for a reason, right? All right. Oh my gosh, I think we're almost done. Best practices. Well, this is everything we really talked about. Gain clarity on your big life. Set your budgets. Set up your business entity. So that was something that that was one of the topics that you guys wanted to make sure. Set up your business entity. So for right now, most of you probably have filled out your W-9 with your social security number. That's fine. As you grow your business, or as you get new bank accounts, as you decide that you want to open up an LLC and get paid through that, make sure that you are updating your market center so that they know. Your business is going to grow as your skills grow. And so it's going to be really important. The systems that you set up right now, they might not be the same systems that you're going to use in 5 years, but just be intentional about how you do things now so that you're set up really well for when you're successful. Prepare for your future, set dates, hire an accountant, a CPA, attorney. See, I'm not crazy. It says that on the screen. I think that's actually our last slide. Let me stop the share. There were some things that we didn't get to cover. How do we track expenses, mechanism and expenses? So we talked a little bit about the actual, like what expenses are and what would be considered expenses, but how do you track them? So does anybody have a tracking mechanism that they're using right now that they really love, that they'd like to share with the group? I'm going to give you my advice, and remember that it's advice. It's just like raising kids. You accept advice and then do it your own way, which is what I did. So it doesn't look like anybody has a good way that they love. So I'll tell you, I love QuickBooks. I have to use a different system now just because I run a business for Keller Williams, but I do love QuickBooks. I would always advise people not to get, unless you're really, really watching your expenses, don't get the one for self-employed people. Ironically, it's not a great product and it does very little. So I think you can upgrade to like the $19 a month. There's a cloud-based one and it's a really great system. So you can sync it directly with your bank accounts. So the ideal scenario is you have a business bank account, right, that accepts your commissions and you have pay your expenses out of. It syncs directly into a system, Microsoft Money, QuickBooks, whatever it is, and you can very easily categorize things so that you don't have to keep things in separate folders. And I mean, I have had agents come into me to do their bookkeeping with literally like a folder with like hundreds of receipts in it. Just kill me. This is an opportunity to be digital. Even you, Gemma, you can do digital on this one. Yeah, I promise you can still do your checkbook, but you can do digital on this one. I promise. So yeah, so that's one that I have used that I really, really like. It also will produce a P&L for you, which is a profit and loss system, or a profit and loss statement, also called your income statement. So profit and loss allows you to analyze your business. It's something that not enough agents think about and do. And it's a really good idea because as you grow, as you spend money, it's going to help inform your decisions. So the nice thing about being new to the business is you get to choose what kind of an agent you are. And I would implore you, be better than most. Be better than most in running your business. You have an opportunity to be better than most, and it'll get you a lot farther, I promise.